Bitcoin hash rate on the rise despite heat wave. Price of Bitcoin drops to $27,000 on Binance.us. Bitcoin price could go to $120,000 before the end of the year. TSwift allegedly did accept the FTX partnership, but was turned down by FTX. De-dollarization is inevitable. Dynex is in danger of a 51% attack. Conflux proposes 2 new improvement proposals, and Komodo is renaming all of their applications. Welcome to another episode of Blocks, where I cover the latest cryptocurrency news from the perspective of a cryptocurrency miner as quickly as possible. Let's get into it. Today, we have some exciting news to share about Bitcoin's hash rate from Luxor's Hashrate Index. Over the weekend, Bitcoin's hash rate reached a new all-time high of 401 exahash a second. That's an incredible milestone for the network and shows the growing strength and security of the Bitcoin blockchain. Interestingly, this surge in hash rate comes on the heels of a heat wave in Texas, which is known as the Bitcoin mining capital of the United States. Despite the extreme heat, the Texas grid managed to withstand the strain, and now the hash rate is bouncing back with a vengeance. The 7-day average hash rate has increased by 8.5% to 398 exahash a second, while the 3-day average has risen by a staggering 18% to 444 exahash per second. What's even more remarkable is that the majority of this growth occurred over the weekend. It's not just Texas miners contributing to this surge in hash rate. Miners from around the world are also expanding their capacity, fueling the overall growth of the network. This means that the upcoming difficulty adjustment is expected to be significant. Based on the forecast from the hash rate index on Luxor, they anticipate an adjustment above 7.5%, meaning that miners may experience lower payouts unless the price of Bitcoin increases substantially. One interesting trend to note is that as the hash rate surges, the hash price is actually falling. This is not due to a decline in Bitcoin's price, but rather a decrease in transaction fees. After a period of high transaction fee volume, fees are now normalizing, resulting in lower overall hash prices. Additionally, we are seeing a divergence in the pricing of different mining rigs. Next-gen ASICs like the S19 XP are rising in price as miners prioritize these models in preparation for the upcoming halving. Meanwhile, other models are either falling or stagnating in value. This offers a great opportunity to still get into the market with S19, S19J, and S19 Pro models. Overall, the current state of Bitcoin's hash rate is impressive and indicates the continued growth and development of the network. We will continue to monitor these trends and provide you with the latest updates in the world of cryptocurrency mining. Bitcoin was trading at a discount of nearly $3,000 compared to global spot prices, presenting a potentially lucrative opportunity for traders. Ethereum was also experiencing a discount of approximately $200 on the same exchange. Even stablecoins like Tether were trading below their intended value. However, there is a catch. These discounted prices are only applicable when trading cryptocurrencies against fiat USD on the platform, and users have been unable to deposit new USD into their Binance.USD accounts, or Binance.US accounts, since June 9th. This means that most investors cannot take advantage of these discounts due to restrictions imposed by the exchange. Binance.US has informed its customers that USD withdrawals will be suspended starting July 20th, adding to the uncertainty surrounding the platform and contributing to the persisting discounted prices. The existence of large arbitrage opportunities between major exchanges like this raises questions, as noted by Jim Chanos, an American investment manager. If cryptocurrencies are considered a next-generation solution to fiat currencies, why do such price differences exist? This observation highlights the ongoing challenges and complexities within the cryptocurrency market. Standard Chartered Bank has released a research report stating their revised price forecast for Bitcoin. According to the British multinational bank, Bitcoin could potentially rise to $50,000 by the end of this year and up to $120,000 by the end of 2024. This is an increase from their previous prediction of $100,000 by 2024, which they now consider too conservative. Bitcoin, the world's largest cryptocurrency by market value, has already seen an 80% increase since the start of this year and is currently trading at around $30,100. Standard Chartered attributes this potential rise in Bitcoin's price to several factors, with one of them being banking sector crises. The report also highlights the increased profitability of Bitcoin miners as a driving force behind the price surge. Jeff Kendricks, the head of FX and digital assets research at Standard Chartered, explains that miners not only maintain the Bitcoin ledger, but also play a crucial role in determining the net supply of newly mined Bitcoin. With this new price forecast, Standard Chartered sees significant upside potential for Bitcoin's future valuation. However, it's important to remember that the cryptocurrency market is highly volatile and subject to various factors. As always, it's important to do your own research and make informed decisions when investing in cryptocurrencies. According to a person familiar with the matter, Taylor Swift did indeed sign and agree to a sponsorship deal with FTX after months of discussion. However, FTX executives ultimately decided not to proceed with the agreement. This information contradicts the public messaging surrounding the failed FTX Swift deal. Previously, a class action attorney praised Swift's due diligence efforts and stated that she had questioned FTX about their listing of assets as unregistered securities. However, it turns out that Swift did in fact agree to the deal. The signed agreement was sent to FTX founder Sam Bankman-Fried's email box, but remained unanswered for a few weeks. Ultimately, a group of FTX executives convinced Bankman-Fried not to move forward with the reported $100 million deal. Three other sources familiar with the matter, as reported by the New York Times, confirmed that Swift's team signed the deal with FTX after 6 months of negotiation, but SBF decided to cancel it. It's important to note that the person familiar with the matter wishes to remain anonymous due to ongoing federal and bankruptcy proceedings. The revelation of an FTX Swift partnership was initially reported by the Financial Times. As a quick recap here, FTX filed for bankruptcy protection in November of 2022, and SBF himself faces multiple federal charges, including fraud and campaign finance violations. Additionally, 3 other FTX executives have pleaded guilty to various federal charges and are cooperating with the government's prosecution of SBF. So there you have it, sons. Despite the initial confusion and public statements, Taylor Swift did indeed sign an agreement with FTX, but ultimately the deal fell through. In a bold move to challenge the global reserve status of the US dollar, the BRICS alliance is planning to launch a new currency backed by gold, according to RT News. Russia has been advocating for this strategy, emphasizing the importance of pegging the currency to gold. This development comes just ahead of the upcoming BRICS summit, which will be held in South Africa in August. During the summit, the formation of this new currency will be discussed and laid out. To solidify their intentions, the BRICS nations have been stockpiling gold over the past 18 months, aiming to lessen their reliance on the US dollar. China, for instance, purchased 102 tons of gold, while Russia acquired 31.1 tons in the last 6 months. India, on the other hand, added 2.8 tons to its gold reserves for the first time in over a year, with the potential for further acquisitions by year end. By backing the new currency with gold, the BRICS alliance aims to create an alternative to the US dollar, potentially making it the preferred choice for cross-border transactions. This move places the US's dollar's global standing in jeopardy, as gold may be viewed as a safer investment option, especially in an uncertain economic climate. Currently, the US dollar carries the risk of mounting debt, which could have detrimental effects on developing countries if a debt ceiling crisis worsens. As a result, many nations in Asia, Africa, Latin America, and Europe are exploring alternatives to the US dollar for global settlements, seeking stability and security. This upcoming launch of a gold-backed currency by the BRICS alliance marks a significant step toward challenging the dominance of the US dollar in the global financial system. As the world closely watches the developments of the BRICS summit in August, it remains to be seen how this strategic move will shape the future of global currency dynamics. Dynex has a problem. The current hash rate distribution sees Ecopool with over 51% of the hash rate. This presents security issues, as it means if someone hacked Ecopool or the pool itself has a bad actor involved, there is potential to compromise the Dynex network. Due to this, the Dynex developers released a vote on Discord with potential solutions. Unfortunately, due to the low voter turnout of just a few hundred people, it was decided to not make any changes. If you are mining Dynex, please consider choosing a pool other than Ecopool for health of the network. Conflux has released two new improvement proposals for the network, CIP 112 and CIP 113. To give a simple summary of CIP 112, the custom field in block headers is currently encoded incorrectly. Instead of appending the RLP encoded data of each element in the custom list, raw bytes are being appended. This issue can result in a different custom field when decoding. Payloon's proposal aims to fix this by ensuring that the custom field is encoded and decoded as expected. Moving on to our second proposal, CIP 113. This proposal is also by Payloon, focusing on making the proof of stake POS for short finalization process faster on the Conflux network. The proposed implementation involves reducing POS round time from 60 seconds to 30 seconds. Additionally, the wait time for validators to sign a proof of stake confirmed pivot block will be shortened from 50 epochs to 20 epochs. It's important to note that both of these proposals are considered protocol breaking changes, meaning they require a hard fork to be implemented. Upgraded nodes should ensure they encode and decode block headers in accordance with these new rules. We have exciting news from Komodo, a leading blockchain technology provider. They are taking a significant step towards making the decentralized economy more accessible for end users and developers. As of today, Komodo has officially renamed its flagship end user application from Atomic DEX to Komodo Wallet. This change aims to highlight their technologies closer to the well-established Komodo brand, making them more accessible to everyday crypto users and blockchain developers alike. But that's not all. The project has also renamed their Atomic DEX API to Komodo DeFi Framework. This change better reflects the multifaceted nature of Komodo's developer solutions, appealing to crypto projects, enterprises, and independent developers. Now, all of the Komodo products will exist under a new unified brand umbrella called Komodo SDK. This strategic move emphasizes their market leadership in non-custodial wallet technology and allows them to better present their unique technology to the growing community of crypto hodlers. Komodo Wallet is an all-in-one application that includes a peer-to-peer DEX and peer-to-peer bridge with cross-chain swap capabilities. It provides secure storage for hundreds of blockchain networks and their respective cryptocurrencies. So for those looking to move their funds off of centralized exchanges, Komodo Wallet is a solution. In addition, by renaming the Atomic DEX API to Komodo DeFi Framework, Komodo aims to reach more blockchain developers. This change reflects the importance of their developer solutions and invites more cryptocurrency projects, enterprises, and independent developers to join the Komodo ecosystem. Furthermore, brand unification supports a larger initiative to highlight the growing importance of the KMD coin. Currently, taker orders on DEX trades within Komodo Wallet receive a 10% discount when selling KMD for another asset. Additionally, Komodo plans to implement a mechanism that will burn a small amount of KMD for each DEX trade that takes place within the Komodo Wallet, making KMD a deflationary asset. Caden Stadelman, the CTO of Komodo, believes that the brand unification represents a pivotal moment in Komodo's history. It encapsulates their vision for a decentralized future, unlocking new opportunities and driving greater adoption of decentralized technologies. He is confident that the Komodo wallet will set a new industry standard as the ultimate non-custodial wallet and cross-chain decentralized exchange all in one application. To support the brand update, Komodo kindly asks everyone to replace any existing Atomic DEX logos with Komodo wallet logos. You can find the new logos on their website. That wraps up another episode of Blocks. Thanks for watching. For my cryptocurrency mining guide, please check out sonofatech.com. And for my daily moves, check out sonofatech.locals.com. I will see you next Tuesday.